Two big things have happened in the last 24 hours. One, Fisker Automotive, a darling of the EV world for years, has declared bankruptcy. Its stock is down 51% today to like 2 cents per share. And two, saw an article the other day, and at first it made me laugh, and then I was like, wait a second, actually it's not a bad idea. Could GameStop be the next Berkshire Hathaway? What does that mean? Guys, let's go with the second one first. Blue Chip Stamps was a company that Charlie Munger and Warren Buffett bought in 1970 or so. Mo, do you remember what the revenue was when they first bought it? No. $120 million. Okay. 10 or 11 years later, do you know what the revenue was? Oh. $100,000. Oh. It had fallen 99.9% in revenue. And guess what? If you'd bought with them, you made 15% of your money. They managed the money well. There was a lot of money in the account. There was a lot of float coming in, and they were able to invest it at high rates of return. This GameStop saga has benefited two entities completely. Roaring Kitty and GameStop, the company. They have issued so many shares, and they have so much cash now sitting on the sidelines that this is the idea of how GameStop could become the next Berkshire Hathaway. Their activist investor is a big fan of Berkshire. What were you going to say, Mo?
I was going to say, do they have what it takes to do that?
So, or you don't need to, but you don't need to be able to get 20% returns. First off, Berkshire Hathaway used float, which that means that they were taking money. Whenever you pay your insurance to the insurance company, they expect to pay that 100% out at some point in the future. They just don't know when. So in the meantime, while they have that money in their accounts waiting to be paid out to you, they invested at higher rates of return. That's what Berkshire Hathaway did. It's cheap leverage. It's basically borrowing at 0% and reinvesting at higher rates. Okay, that's awesome. Now, from there, GameStop was basically able to sit there and say, hey, all you suckers out there who bought GameStop thinking it was the hype, we're going to go sell you a ton more shares, put the money in our bank account, and when the stock falls, we still have the cash. If they are able to take that money and reinvest it at a high rate of return, they can generate a lot of value for shareholders. But let's go see how much debt the company has. Total debt on the company is $1.28 billion. They just raised like $4 billion.
Yeah, they did.
Guys, this company has the potential. Do me a favor. Shut down all these stupid stores.
100%.
This company is not making money. It is too difficult. What was that?
Does anybody go to GameStop anymore?
Tim was saying the other day he went to GameStop and it was very depressing.
I could see that.
Look at this. 10 years ago, GameStop did $9.3 billion in revenue. The last 12 months, it's done 4.9. What's its profit been? 10 years ago, they made $393 million. Oh, last 12 months, they made $25 million. Shut this bitch down. Take that cash and start investing it. Because guess what? If you have that have they reported the $4 billion in cash yet? I think I heard they have $4 billion in cash. Because they just deployed a lot. This is showing $1.9 billion. They just sold a lot of shares out to get more cash in. That net amount, paying off the debt, would give them $3 billion. The market cap right now is 7.65. So essentially it's $4.65 billion net. You look at this thinking to yourself, okay, what can they do with this money? If they can go invest it at higher rates of return, they can make this, buy individual companies and get higher rates, they can make this a viable business, another Berkshire Hathaway.
That'd be incredible.
That would absolutely be incredible.
This has been the greatest saga of, I can't even put words at it. It started on Reddit, and we started just
$50,000, and he made like $300 million on it.
Screwing hedge funds, SEC getting involved, all this, and now it might be Berkshire Hathaway.
Yeah. So what's the stock at right now? It was down a lot. Okay, it's about 25 bucks. So this is Friday. This is the strike price for Roaring Kitty. Oh no, he got rid of all his calls.
Yeah, he did.
And now he only has 9 million shares.
Yeah.
So his value right here is $225 million on his stock. Now, I'm looking at this thinking to myself, okay, if you have a good activist investor, which they seem to have somebody who loves Buffett, but is he a real Buffett fan or is he one of those people who's just lip service to it?
That's where I'm leaning.
Most people are just lip service to it. Or can he sit there and guide the company to make smart acquisitions that can grow the value of the business? But the business of GameStop, of going to a store
it's over. I have to think it's over.
I just bought a PlayStation 5 and I bought the digital version. I'm like, I don't want to deal with case. I don't want to deal with CDs.
And even if you are going to buy a CD, aren't you going to go to like Amazon at this point?
Yeah, exactly.
Or like Target?
This is where the opportunity could come. If this stock keeps falling, I'm actually looking at this, Mo, going,
oh my God.
If it goes to $5 a share.
Boy. You going at it?
I mean, Mo, I think it makes sense even at $10 a share with the cash they have on hand if they shut down the stupid business. They got to shut down this business.
I would suggest you put it on your watch list because that can happen within the next couple of minutes. So,
all right. Point number 2, Fisker Automotive, guys. We talked about this years ago about EV. And Paul, EV is the future. You don't get EV. You don't get it.
How many EV? It doesn't matter what all it needs to do is propel itself down the road with a battery and you're going to make money.
Guys, there's been fraud. There's been tons of stuff that happened. How many bankruptcies have there been? There's idiots out there like Stockmo saying, I would buy Workhorse even if they don't get the government contract. They didn't get the government contract. He sold his Workhorse. Guys, it's easy to love it when it's going up. The question is it a long-term viable business? This is another one that bites the dust. And by the way, I like that Fisker car. I even like their SUV, the Ocean, I think it was called. I thought that was a nice-looking car. Their sedan back in the day.
Yeah, the Karma.
The Karma. That was a nice-looking car. The company's declared bankruptcy. This is what happens with hype. You still have to look at the fundamentals of the business. Can it still survive? You look at GameStop here. Can it still survive? These are the things that matter. Don't follow the stock price. We're here to teach the process that when you buy a stock, you're buying a piece of a business. You're buying a future stream of cash flow. And the money you pay today, your return's gonna be based on all the future cash flows you get. But the best way to get a high return is to pay less. That's the big key there. Retail's tough. The auto business is very difficult and very competitive. Tesla seems to be making amazing headway with that. But look at just automotive businesses in general and airline businesses from 1900 to 1930. How many were started? How many failed? Hundreds and hundreds and hundreds of them. But yet, the airline industry and the auto industry has grown how much in the last 100 years? That's the big key for you to understand. Just because there's a lot of potential in the market doesn't mean that every company going into it will succeed. In fact, the more and more companies enter the market, the less likely they are to succeed. So guys, if you like this, like what we're saying and how we're saying it, do me a favor, subscribe to the channel. We do 4 or 5 videos every week where we react to what's going on in the economy and the news, etc. So thank you very much for your time. See you in the next video.